And we are certainly glad you could make it to today's meeting. We're going to cover the same topics as we did yesterday. So thank you all for your time. Before getting started, we did just want to give you some housekeeping items. So we are going to be using a Zoom webinar feature today. We ask that you do remain muted. Please use the question and answer feature to ask questions. Likely most of your questions will get answered in the course of the meeting. So please make notes and use that Q&A feature. And at the end of the workshop, we're going to go ahead and open the floor for questions on that Q&A, and we'll be answering those live. We do have a pretty hefty agenda to cover today. We'll do some introductions, some background on our program funding. We're going to discuss income limits, the down payment assistance programs that the city and Burbank Housing have available, the terms, requirements for the first mortgage, home buyer requirements. We're going to cover assets. We're also going to cover program documents and how to apply. I will say that the intent for today's meeting is exclusively for lenders and realtor professionals. It's not intended to be a client meeting, as we're going to cover more underwriting topics today. If you have buyers interested, we have some information for you for them and next steps on the program towards the end of our meeting. So we would like to start today's presentation off with some introductions. So I do want to start by introducing myself. My name is Robin Van Ecklenburg. I work with Burbank Housing and have been privileged to be a part of the homeownership team for 7 years now. I'm going to introduce my partner, Roxanne Kidney. Rox, you want to introduce yourself?
Hi, good afternoon. My name is Roxanne. I've been with Burbank Housing going on 24 years. I work in the homeownership department and in the accounting department, and I love what I do and I'm excited to be here. Thank you for all being here.
Santa Rosa?
Hi, I'm Nicole Del Fiorentino. I'm the Housing and Community Services Manager overseeing the Housing Trust Division for the Housing Department. We oversee all of the production programs for the city. Angela?
Hi, everyone. Angela Morgan here, City of Santa Rosa. I'm a program specialist in the Housing Trust, specifically for the City of Santa Rosa. Been in housing for a very long time, very familiar with our programs today, both programs today. Look forward to working with everyone, building some new partnerships, getting people into homeownership housing, and looking forward to this opportunity.
Thank you all so much. So today we're here to talk about our down payment assistance programs, and we are really, really excited to be able to roll these out to our lender realtor partner communities. For those of you who don't know who Burbank Housing is, we are a local nonprofit developer. We've been around for over 40 years, have built over 1,000 ownership units. We primarily work with first-time home buyers, and we, over the course of that time, have done lots and lots of down payment assistance loans and programs specifically for the homes that we built. What's new and unique with this program that we're really excited to roll out is the opportunity to work with a greater community and be able to work with the greater lending and realtor community to be able to help on homes that we didn't build, but that we can continue to create that affordability and hope to bridge the gap in what folks can qualify for. And we're great partners with the City of Santa Rosa. We've done lots of developments and programs with them for years and years. So this is a really natural, exciting process to take with our city partners to be able to roll out these two wonderful programs together, which, by the way, we'll be able to work together. You can, and you'll learn more about that shortly, but you will be able to use for your qualifying buyers both programs together. A little bit more about Burbank Housing for those of you who may not be as familiar with us. We've done a variety of different home ownership projects, like I said, over the last 40 years. On the screen, you're going to see some developments that we've been a part of. We do still manage active resale programs for the homes that we have built and constructed over the years. More recently, we completed in partnership with the City of Santa Rosa, Catalina Townhomes and Lantana Homes in Santa Rosa. We also did a development in Napa, and both of those closed in 2021. Little bit of background on the program fund. So in 2022, Burbank was awarded over $14 million from the Department of Housing and Community Development, also known as HCD. To be used as gap financing for down payment assistance for eligible first-time homebuyers. We do have a timeline on spending those funds that has to be done by November of 25. And all the funds that we have available in our program will be on a first come, first served basis. Angela?
Yeah, the city, I'm excited to announce, or we're excited to announce that the city has $2 million that has been appropriated as a one-time appropriation of funds. So in July of 2020, the city of Santa Rosa did receive a PG&E settlement due to the wildfires in 2017. So again, the city council did approve a $2 million set aside for this program effort.
Thank you. The first thing we're going to talk about is income guidelines. So when we're looking at administering both of these programs, the households that we will work with do have to meet certain income criteria, and we're going to dive into in just a couple of slides exactly how we look at income and why we look at income the way we do. But when we're determining a buyer's eligibility, we're going to use this chart that you see here on your right hand of your screen. We determine, and this is true for both programs, eligibility based on the number of persons in a household. So we look at anyone who's going to be living in the household, including children or grandparents or mom and dad. Anyone essentially that will be living in the household, we will use to determine the actual household size. And then from there, we have a calculation that we do based on our program requirements to determine the eligibility. So for the Cal Home program for Burbank Housing, primarily, your buyers are going to need to be at or below what we call low income or 80% of the area median income. The City of Santa Rosa's program, you can actually go up to moderate income, the 120%, or the column on the far right. In some cases, and I will get into that in just a moment, the Burbank housing loan could go up to 120% of AMI as well. So in just a general overview, the purpose of our webinar today is to provide you an overview of the down payment programs that we have. We're going to really try hard to answer all of your questions. We may not get to everyone. You may have specific home buyer related questions that you don't see in the guidelines. So feel free, if we don't answer all your specific questions, to reach out to us following today's presentation. So we're going to go ahead and talk a little bit about income and how the down payment assistance programs, most down payment assistance programs kind of look at income the same way. They generally speaking, we calculate income different for our loan than you would as a first mortgage lender. As I mentioned before, we do use all household members that are listed on the application. And we also look at all ongoing income sources for everyone in the home who's over 18 and not a full-time student. And whether or not they're going to be an applicant on the loan, we look at the total income for the household. We also look at things like Social Security or retirement, child support, anything that is going to continue on for the next 12 months, we need to include in the application. The other thing that we look at in determining the total household income is assets. So there's no asset cap, but we do have a calculation that we have to go through to determine your applicant's total household income. And so any income that is derived from an asset above 5,000, or but we will include in the total household income, or we have a calculation that we do for those assets that are above 5,000. We do a calculation, and then that number gets added to our total household income. Angela, do you want to talk about the city asset?
Sure. So we also look at all household assets, and we do a calculation of the. We use the actual income from assets included as part of the income calculation for all assets up to $5,000. Any asset over $5,000 or cumulative over $5,000, then we will use the greater of the actual income from those assets or an imputed income using the current passbook rate of 0.06%, which we will also talk a little bit, we'll repeat again later on in the slides.
Thank you so much. The additional thing that Burbank Housing will be looking at and will use in determining eligibility. So we're going to look at income. We are going to look at first-time home buyer status, but we're also going to look at fire victims. And we have a definition that's been approved by the state for what a fire victim is. So what that means is that those eligible households could actually go up to that 120% of the area median income. So fire victims is someone or the household who's been impacted by any of the federally declared fires in the county of Sonoma. And so what is a fire victim? A fire victim is someone who lost their home in a wildfire, someone who was displaced as a result of a wildfire. So for example, maybe they had to relocate. Maybe it was a temporary or a permanent, either of those would count. Buyers who lost employment as a result of a wildfire, or buyers who experienced a rent increase post-fire, in post-fire's 12 months from the date of the fire, that was at least 10% or greater. So we will need that to determine a applicant's fire victim status and to be able to qualify them. On the application, we'll talk about that in more detail in other slides. We will need proof of that. So just keep that in mind as you're working with applicants and underwriting files, that we do have some flexibility on increasing that AMI for those victims. So we're going to go ahead and get into a summary of each program and kind of how it works. The programs, for the most part, from Burbank Housing and the City of Santa Rosa really do work a lot in most cases alike. There are some differences, and so Angela will go ahead and point those out to you all as we get there. But for the most part, they've been designed to work in conjunction with one another and to hopefully really fill that gap for the buyers that you're working with that are struggling to be able to purchase. So we're going to start with the Burbank Housing Down Payment Assistance Program. The program offers up to 40% down, up to $100,000. The program and the $100,000 is a loan. It is due and payable. It's a fixed rate loan, but your buyers do not have to make monthly payments on it. It's fully deferred and it accrues 1% simple interest annually. HELOCs will not be permitted. we will have sales price limits as required by our program. So we use the most recent sales price, median sales price is published by CAR. And the program can offer use for a variety of things, from gap financing to non-recurring closing costs, as well as permanent interest rate buy downs. Temporary buy downs are not permitted. And then the loan is due and payable either at the end of 30 years, upon sale, upon refinance, or in the event of a default, or in the event that your home's not being occupied as the principal place of residence, which would also constitute a default. Angela?
Great, thank you, Robin. Yeah, so as Robin mentioned, there are a lot of similarities between both programs, and they are also in line to work with one another. So I will, as we go through the next few slides, I'll chime in to point out, the differences between the programs, but specifically for the city's down payment assistance program, which we refer to as our DPAL program. So the first item is the maximum program loan limits. It's our maximum loan amount is 10% of the purchase price up to $75,000. And the next item I'd like to point out is the interest rate for the city's program is a 3%, so slightly higher than Burbank Housing's program.
Thanks so much, Angela. And I do want to point out that this is still a super affordable way to have your first-time home buyers be able to get in. They do accrue a very small amount of interest. It's simple interest, so it's not compounding monthly. And so these are designed specifically for first-time home buyers, specifically for these lower income households, to be yet another affordable way to be able to purchase. Thank you so much, Angela. So we're going to talk a little bit about requirements for the actual property that folks are going to be purchasing. And there are some differences between each program. So for the Burbank Housing Program, the property can be anywhere in Sonoma County. While a home inspection will not be required, it's definitely encouraged, but it's not required. The program does require an appraisal, and the home has to appraise. So in other words, it can't sell for higher than the appraised value. It also can't sell for higher than the median price as published by CAR, which right now I think is about $850. And then the eligible property types for our program are single family residences, condos, townhomes, duplexes, and either new or existing units are fine. We would also have co-op on here as well, although we would classify that as a single family. So we do permit co-op units as well. Angela, did you want to talk a little bit about your property types?
Sure. So our property types, they are essentially the same, but ours is extended a little bit further to allow for manufactured homes, for the purchase of a manufactured home, so long as the land is part of the purchase where the home is permanently attached.
Perfect. And then for the Cal Home Funding through Burbank, we do require a 45 to 60 day from the date of submission for closing. And the reason being is that actually is the money is held at the state. So we have to draw funds from the state. So, we'll work closely with you during the, escrow process, but it'll be, really important for us to know as soon as you have a buyer in contract so that we can request funds pretty quickly. Angela, do you have anything to add on that?
Yes. So the one of the main differences of the programs is the property location. So for the city's DPAL program, the home must be located within the Santa Rosa city limits to be eligible. Also, our program will require a home inspection, and And then lastly, the close of escrow. Ours is slightly, fewer days because our money is local money. So we're able to close a few days earlier just because of the fact that it's local money.
Yeah, that's great, Angela. Thank you. And, we're going to work closely with the state to see if we can tighten those timelines. But right now, that's what we're being told. That's about what it's been in our recent experience. So, but please feel free to coordinate closely with us because that can change. So, we're going to go ahead and now move to the first mortgage requirements for our programs. There are many, again, similarities, a few differences. So for the Burbank Housing Program, we will allow a CLTV up to, which includes closing costs, up to 103%. CLTV, we will require hazard insurance. So as you're getting that policy bound for your first, make sure to reach out to us or have the insurance agent reach out to us so that we can get our lost payee information. We will require ALTA policies and we'll coordinate that all through escrow. As you're drawing your LEs and CDs, make sure to include those as endorsements on your fee schedules. We do negotiate our lien positioning, and so we work very closely with the City of Santa Rosa, the County of Sonoma in some cases on our loan position. In some cases, we have flexibility, others we don't, depending on the source. For the most part, we subordinate to the first mortgage, obviously the first mortgage, and then subordinate our lien to a higher lien amount for any down payment assistance. So that's something that we work closely together with our other partners on determining before closing. I will say when you're writing contracts and having buyers write contracts, do make sure that you have all of the down payment assistance loans listed on the contracts that you plan on using and leveraging for that purchase, and giving enough time for contingencies to be able to give us time to make sure that we're underwriting and requesting the funding from the state. Additional loan terms that you need to be mindful of is we do require all first mortgages to be a 30-year fixed loan. We do permit permanent buy downs. We do not allow temporary buy downs in any capacity. We do require impounds for all of our first mortgage loans. And when you have buyers that are applying for our program, you have to have them pre-approved before they can apply. And we'll need a pre-approval letter as one of the required documents. Angela?
Yes, thank you. So on the first item, the CLTV, our program is up to 100%, but we would allow going up to 103%, only to allow for financed closing costs. And then I believe that was the only item I wanted to call out on this slide. Otherwise, yeah, everything else is consistent on this slide. Thank you.
Yep, I think you're right. Thank you so much. The next requirement or next pot of information we're going to give you is really about the home buyer requirement. So we do have, information that you need to think about as you're qualifying folks. So our program does require your buyer to be a first-time home buyer. That's someone who hasn't owned in the last 3 years. There are some nuances to that, and those are available in our guidelines, but generally speaking, your home buyers need to be first-time home buyers, and we do verify that. Our household income as a requirement, back to that chart that we showed you a few slides ago, for our program, it's 80% of the area median income adjusted for household size, although we can go up to 120 in the event that we have victims of fire. In terms of residency, we do not have any residency requirements. The property that they're purchasing must be in Sonoma County, but there's no residency requirements for us to originate the loan. We will require owner occupants. And so your buyers, as they sign up with us, will be required to agree to long-term owner occupancy. And we monitor that on an annual basis. We do require a buyer contribution of $5,000 for their down payment. We have had a number of questions on ITIN in lieu of a social security number. And the applicants would have to meet all program criteria from the first lender and for our program. And as long as the first lender approves an ITIN or has an ITIN program, that would be acceptable to our down payment assistance. Additionally, we also have a minimum FICO score requirement, and we will require a copy of the credit report that you pull. We won't pull our own credit report, but we will need to see that before we can issue a final loan approval. And last is we do require HUD counseling for each home buyer that will be purchasing. So every borrower that's going to be listed on title and on the loan will have to have a HUD certificate. And most of your buyers, if they're first-time home buyers, are going to be required to have that. Angela, I'm going to go ahead and turn it over to you.
Great, thank you. So this slide, we have several items that I wanted to point out, starting with the household income. The differences here is the city's DPAL program will allow buyers, all buyers, to have incomes up to 120% of AMI, which is area median income that Robin had discussed earlier in the chart. The next item is applicants must also be a current Santa Rosa resident and for the last 3 years as well. Minimum buyer contribution. The city's DPAL program will require 1% of the purchase price to be used as down payment. We don't have, the next item is a FICO scores. We don't have a minimum FICO score, but we will accept the primary lender credit approval to satisfy acceptable FICOs. And again, just like Burbank's program, we will not be pulling a credit report, again, just accessing the primary lender's credit report. And the last item to point out is that our program does require homebuyer education through Balance or Balance Pro. The web link is listed on the slide, and after completion of those program requirements of that homebuyer education, we will require a copy of the certificate of completion to satisfy that requirement as well.
Thank you so much, Angela. And I just want to point out for the Burbank program, if you have an applicant that you know is going to likely apply for the City of Santa Rosa Down Payment Assistance Program, that balancepro.org certificate for your borrowers works for our program as well. So they don't need to do 2 different education classes. That is sufficient. We have some resources as well if you have buyers that aren't going through the City of Santa Rosa program. So, we can definitely make those available. And they're all Fannie and Freddie compliant. So we are, as Angela mentioned, going to talk a little bit more about assets and how we look at assets. So the first category we have is gift of funds to satisfy down payment assistance, or to satisfy the buyer's down payment requirement. So gifts are acceptable, and that would meet the requirement. We do not, as I mentioned earlier, have any limit on assets. We do have an asset calculation though. So we will look at assets over $5,000. And the greater of either the actual income from the assets will be calculated or passbook rate, which currently is 0.06% for all assets in excess of $5,000. You may see on the guidelines that we've made available on our website, there is a change. We had an old passbook rate that does change very infrequently with HUD, but that could change again. So we encourage you to check back. But the ones as posted on the website in the guidelines do need to get updated. Angela?
Thank you, Robin. So the only thing to point out here on this slide is the slight difference of the income from assets, that we do count the income from an asset up to $5,000 that is counted towards the household income, and then the imputed income is the greater of the actual income from the asset, or the current passbook rate, which is the 0.06% of the greater of the two would be calculated also as income towards the household in calculation of income. Sorry.
Right. Thank you so much. So what we do is we will project that household income for the next 12 months. We'll use all of those income sources that they have for everyone in the household. And then we will do this asset calculation. And whatever that number is at the end of that calculation will get added to that total household income. So the next thing we just want to point out to this group is where you can find things. So everything that we have available for the program as of today are available on the website. The website is for Burbank's program is the best place for information, as we're updating that and continuing to update that daily. As of now, we have all of our existing program documents available. We have our state approved guidelines. We have our sample promissory note and sample deed of trust and loan agreement. So you can go to the website if you haven't already been there to get the available PDFs for those documents. I would start by reading those, getting those to your legal department. If you need things beyond those documents like certificates or certifications, we do ask that you complete those after reading those and then send them to us, and then we'll review and get those routed for signature. Angela?
So for the city's DPAL program, the link that you see on the slide here will be, it's not a live link yet. Our website is underway, but when it does go live, again, you'll be able to access, similar to Burbank, you'll be able to access our program guidelines, our sample loan documents, application, and our checklist of information for each buyer and what documentation we're going to require. So not available just yet, but it's underway.
Yeah, thank you so much. And what we will do in our commitment to this group is, as soon as we have two things, we will be following up probably in the next day or so, a copy of this meeting. And the slide deck for the meeting, so you have that and can have some high level talking points for the program. And then two, as soon as the city's DPAL program and website is launched, we will reach back out to all of you who have signed up so that we can notify you of that, so you can get access to all of those documents as well. So you'll be hearing from us in the near future on all of those. The next thing we're going to talk about is how to apply. So just, I want to make sure we point out that these are two separate programs. They have two separate application processes, two separate, program documents and guidelines. So while we're putting this on together, we really want to be a resource to the community. We also want to make sure that everyone's clear that, you're going to have to submit and your applicants or your buyers are going to have to submit applications that we're creating now for each program through each process. They're separate processes. And then they're likely going to be asking, or we're likely going to be asking for the same kind of documentation. We won't be sharing that between the city and Burbank. So you will have to have your buyers apply for both programs separately. And both programs will require that before buyers apply that they are lender pre-approved. And you'll need to issue a pre-approval letter to all your buyers before you have them apply. So Burbank Housing has got an application portal that we're actually implementing, and it should go live sometime next month. And it's going to be a really wonderful, easy to navigate online application tool that buyers that are interested in this program that appear to meet the qualifications can use to apply. We will request that the buyers upload certain documentations for us to be able to review, including a pre-qual letter. We're going to want to see pay stubs, bank statements, tax returns. And what we'll do is we will issue a pre-qualification in that portal once we've determined eligibility. That pre-qualification will be good for 90 days, and your buyers then from there can go shopping for a home. Once they receive an accepted offer or have an accepted offer on a property, then they'll have 24 hours to log back into that portal. It'll be unique to them, and be able to upload all of the remaining items that they'll need to, give us for us to be able to underwrite the property. The funds, just a note, are available again on a first come first serve basis. So, we'll reserve funds once we get a completed offer and have underwritten that property. But please, reach out to us. And if you think you have a buyer who's going to be in contract, and we can work closely with you and get you everything you need. But it'll be a pretty simple process for approval. There will be more information posted soon on our website, the links below. And as soon as that web link or that portal is open, we will notify you about that launch. Angela?
Great, thanks. So for the city's DPAL program, again, it shown here on this slide is the same link that was shared on the previous slide as well. And yes, so the application process for us will also be described in the application, and our checklist of documentations that we will need. And just to reiterate, we are not sharing documents between Burbank and the city. So yes, everyone will need to apply separately, even if you're applying for both programs. So whether you're applying for the city's program or Burbank's program or both, we will need separate applications, and we will each issue our own approvals as well. At the city, however, we, given the availability of homes and high interest rates and difficulty of people getting to ownership, we will provide a 6-month reservation for eligible applicants. So wanted to make sure to point that out. Again, our website is not live yet, but we will be rolling it out soon.
That's great. Thank you so much, Angela. So that is the presentation. We're going to go ahead and open the floor to questions. So we do have some questions coming in. I'm going to go ahead and answer those live. Feel free to use that Q&A feature to ask any questions that you might have, and we'd love to be able to answer those for you while we're all together. The first question is can all lenders participate in the program, or do we need to get approved? Great question. The answer, and I think it'll be for both, is first you need to get these loan documents that we have made available on our website. to your legal department. Your legal department will then need to approve the program. These are very traditional down payment assistance programs. So it likely won't be a problem. We don't require any kind of lender agreements or anything, but we will want an email once your legal department has approved the program for our files, so that we know that you're able to lend on those programs. The next question that we have is, how do we verify the number of people living in a household? So we're going to require that anyone who's living in the household or who will be living in the household be included in that application. For example, maybe you have a family who has a college student and 2 kids under the age of 18 who are living in the property. So a total of three children and maybe 2 adults. We'd count that as a household size of 5, provided that that person, that child who's away at college is coming back. So we're going to count who is living in and going to be living in the household. The next question is, how do we count 401k in the income calculation? So for our program, the 401k, any 401ks would be considered an asset. So we do the asset calculation on that. 401ks, generally speaking, wouldn't be income producing, but they would be an asset. Angela, do you have any more feedback on that?
No, that's consistent with ours as well. Thank you.
Great, thank you. Next question, why would someone use Burbank versus Santa Rosa? And please explain how we can use both. So it might come down to eligibility. Maybe you have an applicant who's not a fire victim, but is over the 80% of AMI. They might not qualify for Burbank's program. In contrast, you might have an applicant who's buying in the, somewhere in Sonoma County, but not in the city of Santa Rosa, and they wouldn't qualify for the city program, or maybe they're not a resident of Santa Rosa and wouldn't qualify. So you could, there's just a variety of reasons why, maybe you have applicants that wouldn't qualify. How you could use it for both is, if your applicants met all of those criteria, right, that the home is in Santa Rosa, so that would qualify for both programs, and the household's income, it does not exceed the program guidelines, and the applicants are eligible. So there could be cases where you could have some eligible and not. Anything to add to that, Angela?
No, that's consistent with our understanding as well.
Next question, are there any requirements for servicing of the loan post-close? Can the lender retain servicing? So the lender will retain servicing on the first. The city and Burbank Housing will retain servicing on our loans, and we do annual monitoring, which is probably a lot different than servicing of a performing loan. So in terms of your servicing, that would remain the same for your loan, and then we will service our own loans.
I'd like to chime in a little bit, maybe a little bit more on that question and elaborate a little bit more. So post-close, we do, so our loans require owner occupancy. So there will be an annual owner occupancy certification that will occur every year for the term of the loan until the loan is paid off. And as well as, but we do not require any income certification, household income certification eligibility in that regard, post-close, only owner occupancy.
Thank you so much for pointing that out, Angela. That is the same with the Burbank program. So we have owner occupancy, but not long-term income, monitoring requirements. So really, we're just monitoring on an annual basis to make sure that your buyer lives in the property. Next question is, do you already have a list of participating lenders? We do have a list of preferred lenders that we've worked with in the past for our development work. We know that the programs are consistent with Fannie and Freddie guidelines, so we're pretty confident that most lenders can approve the programs, and we'll meet those criteria. Anything to add to that, Angela?
No, nothing to add. Thank you.
Yep. And, we're really excited to be able to partner here with the greater community. So this is, really cool opportunity for us to be able to, work with you all and be able to help create more affordability and be able to make this program available to a greater audience. The next question we have is, this one's for you, Angela. For the DPAL program, is it simply a requirement that a person live in Santa Rosa, or must they be an employee of the city of Santa Rosa as well?
Good question. A good clarifying question. No, just a resident within Santa Rosa city limits. Being a city employee is not a requirement of this program.
Thank you so much. The next question is, can you explain a bit more on the 401k? So if someone has a very large 401k and doesn't want to touch it, it could possibly disqualify them from the program. And the answer is potentially. They wouldn't need to touch the program, their 401k, unless they needed to access money for their down payment. But we have to, our guidelines and the state requires us to look at all assets, including 401k, and include those in the calculation. The next question that we have is, will the home buyers funds that will be used towards the home purchase count as an asset that would need to the passbook calculation? And the answer is yes. We would use their down payment to also as part of that asset calculation. And I think same with you guys, right, Angela? Yep. Fantastic. Do we have any other questions that we can answer? Any other questions? Okay, so next steps, I don't see any other questions coming in, is, just a reminder, we're, oh, I lied. We have one more question. When can we expect to get the slides emailed? Thank you so much. We will be having two things, actually. We will make the PowerPoint available probably in the next day or so. It's ready to go, but we just need to get that sent out. We will likely do that through the Eventbrite link. So that's number one. Number two is we are trying to figure out how to make the recording of this PowerPoint available to you. So that might not come in this next email, probably in the next 24 hours or so. That might come in a subsequent email, but stay tuned for that. And then number three, as soon as we have a launch date for the City of Santa Rosa website and a rollout of that, as well as a launch for our portal, we will notify you all immediately so that you have access to that and can pass that along to your clients. I have one more question. Awesome. Okay. Will you or do you have flyers we can edit to help market these programs? The answer is we're working on those, and we'll have flyers available. I will let the group know that we are going to be doing a home buyer education webinar later in September. We anticipate having both programs fully ready to go or accepting applications around that buyer date or shortly thereafter. So please stay tuned for that. Check for emails from us, and then make sure to check our website. We are updating our website often. And so, if you don't hear from us right away, definitely check the website. Thank you all so much for for spending some time with us today. We are really excited to work with you all. The city and the team at the city are like awesome partners. And so we're really excited to have this, opportunity to partner with them as well and be able to help folks get into housing. So it's really nice to spend the day with you. Please reach out to us if you have other questions, and make sure to check back in your email to hear from us, or on the website. And we look forward to working with you all. Thanks so much. Take care.
Thank you.